Hey guys, Zader here. On my channel we talk about startups and businesses that are changing the world today. Today I want to talk about SPACs. So a little bit of a background on SPACs. 2020 was called the year of the SPACs, with about 295 companies SPACing and about 250 IPOs via SPAC. According to some sources, 2021 has already seen about 65 SPACs only in the past 3 weeks, with more to come on the way. That's why I'm calling it the attack of the SPACs.
Nice.
For starters, what are SPACs? SPACs are special purpose acquisition companies, or blank check companies, that are founded for the sole reason of acquiring other companies. Last year in 2020, a few famous venture capitalists raised money via SPAC. Famous VCs like Bill Ackman and Chamath Palihapitiya have been raising money via SPAC for quite some time, which is kind of why they've gone onto everyone's radar. So a little bit about the details of how SPACs work. SPACs are blank check companies with no operation. They typically IPO at $10 a share, and the outside investors don't know what company they will merge with or acquire. The monies that they raise from those initial shares are placed in an interest-bearing account, and the only way that these SPACs can use the money is if they actually acquire a company within 2 years. Otherwise, they have to return the money to the investors. In some cases, some of that interest-bearing account capital can be used as working capital for the SPAC, and typically these SPACs are listed on the major stock exchanges like the New York Stock Exchange. A few recent SPACs that have IPO'd in the past year include SoftBank filed its first SPAC and raised $500 million and is rumored to be prepping at least 2 additional SPACs this year. Global Synergy Acquisition, a tech services focused SPAC, filed for a $225 million IPO. Other notable SPACs include Bill Ackman's Pershing Square, which was the largest SPAC ever when it went public. It raised about $4 billion and still has not identified a merger target that's going to use with that $4 billion raised. Other major SPACs are ones run by Chamath Palihapitiya. His company, Social Capital Hedosophia Holdings Corporation, have launched a number of SPACs in the past year as well as this year, and have raised money and merged with companies such as Virgin Galactic, Clover Health, Open Door, and SoFi, the consumer banking platform. Another notable SPAC was Luminar Technologies, the LiDAR company for autonomous vehicles, that merged with Gore's Metropolis earlier this year and raised a bunch of money in the process. So why did they pop up suddenly, and what are the advantages of them to an IPO? Well, if you're an investor, SPAC can be an alternative asset class to put your money into. SPACs typically go through a quicker process than IPOs, therefore allowing investors to raise money faster, and it might be an attractive option if you're the owner of a small growing company like Luminar Technologies was, because a SPAC can take you public much quicker than an IPO, and you can use a lot of that working capital to invest in R&D and a lot of the processes that you're trying to build. And it's typically under the guidance of a specialized or expert in the field that usually partners with you as the company to raise the money and to guide the management team to where the next opportunities are for the company. There are several ways to go public, IPO being one, but SPACs have a major advantage because IPOs typically take 4 to 6 months and have strict regulations on what you need to do. So yeah, that was just a quick video on SPACs and what they are. I did a little bit of research on SPACs and I think they're really interesting. If you find this to be helpful or interesting at all, just hit the subscribe button and we can keep learning together. I talk a lot about startups and businesses and new ideas that are getting funded. So yeah, if you find any of this interesting, just hit subscribe. I'll see myself out. Take it easy. Peace.